we turn our attention to business and market news. The rand drifted lower in early trade, tracking the US dollar, which rose to a one-week peak, which was higher than the Treasury yields. The rand has shrugged off the domestic data releases, including better than expected second quarter GDP figures on Tuesday, and responding to the global factors instead. But to talk us through these as well as other business stories, we're joined now by Mr. Zwelakhe Mnguni, who is the Chief Investment Officer at Benguela Global Fund Managers. Mr. Mnguni, good to have you with us on the Daytime Update today. Now, when we take a look at the rand, it drifted lower early today, tracking the dollar, which rose to a one-week peak, which is higher than Treasury yields. Talk us through that.
Yeah, I think there has been quite a theme in the last week around the weakening U.S. economic growth and the rising inflation, or the prospect of inflation remaining high for quite a sustained time. And that has created quite a difficulty for markets to digest the news. And as you would have seen, global markets came under pressure. The rand came under pressure because the U.S. bonds actually rose, and as they rose, the dollar strengthened, and that basically led us to a weaker rand. So the rand, I think, has moved from about 14.22, now we're around 14.30. So yeah, I mean, it's more a dollar movement that is driven by the situation in the U.S., whether growth will slow down as a result of the Delta variant, and therefore, while inflation is rising. So that is what they call stagflation.
Now, oil prices are holding steady as the market mouths the effect of delays in the Gulf of Mexico, while gold approaches $1,800 an ounce as the dollar rally halts. Talk us through those developments.
Yeah, so oil is facing, quite competing forces at the moment. So on one side, a significant component of the U.S. production, I think it's just under 20%, that is out of production because of the Hurricane Ida. And on the other side, so that would have constrained supply, and it would have supported a higher price. But on the other side, what you have is the Delta variants continue to affect global economies, and the fear is that it could actually slow down the global economy, and then demand would fall. And that is why we kind of see the oil price drifting along. But essentially, the two forces are competing, but probably if the Delta variant continues, we would probably see slightly weaker oil price in the coming weeks.
We see Old Mutual, they've updated the 2021 economic growth forecast to 5.5%. What elements have influenced the group's revised projection?
Yeah, I think there's two elements. I mean, on the one side, the inflation, the fact that the rand has strengthened, has been kind of supportive of the inflation. So a stronger rand is a major input in the oil price, or the rand oil price, which then affects our inflation significantly. So that element has been boosted by the fact that we have we've got a stronger rand relative to last year, for example. On the other side, you've got growth starting to come back, and as you said earlier in the introduction, that growth was better than expectation. It's not fantastic growth that we have. I think we came out at 1.2 last quarter, 1.2%. But still, it was better than what the market were expecting. So if you take, give or take 4% inflation plus 1.5 real growth, you might actually come out around the number that Old Mutual is talking about of 5.5%.
We see food producer Lipstar, they reported a 27.8% fall in their half-year earnings, probably hurt by unfavorable foreign currency movements as well as the lower trading volumes. Talk to us about dynamics on that front.
Yeah, certainly the numbers were badly affected by, as you said, the forex. But I think the big challenge that they faced was they increased prices, so they pushed hard on the inflation because the input costs rose, and they tried to push their prices to make up for that, and they lost quite a fair amount of volume. So in the food component, or the food and perishables division, they did okay on a revenue line, but I think the costs came through there. And then on the snack side and the baking products, essentially that component suffered a lot more on volume. So that put pressure on their gross profit margin, and that effect actually filtered straight down to the earnings. So the earnings came under pressure as a result of what happened at the top line.
We're hearing AfriCell saying that they're ending their operations in Uganda, where they've really faced a very tough competition from the local units of African telecom firms, MTN as well as Bharti Airtel. Talk us through that decision from AfriCell.
Look, the level of competition in the African markets has been rising. The regulators have been increasing the number of players within the telecom sector to try and bring down the cost of communication. And oftentimes, if you're a smaller player like AfriCell, you tend to face a lot of challenges because you don't have the critical mass to basically make enough money, because most of the time people on your network are calling on other people's networks, and you basically end up sharing the money with other people. So as a result of that, I think the decision was predominantly because of their size and the rising competition in that market.
Do you think they threw the towel in too early? Could they have waited for a little bit longer and continued investing in that market?
If you're burning cash, I mean, there's no earlier. At some point, you're going to have to give up. I think having a license itself is quite a valuable factor, but I think to actually operate, I mean, it's not easy. The likes of MTN have got that scale, and they can operate quite efficiently compared to a smaller operator in a market like that.
Well, we thank you so much for today's market update.